1503 of the Philadelphia Code, we will be recording. The recording will be available on the public online, the Sinking Fund website within 10 days. If you're joining the meeting, you are consenting to the recording, and your login email, phone number may be part of the recording and made available to the public. I hope everyone understands that. The first item on the agenda is the approval of the commissioner's transcript for the meeting of, I guess it's November meeting. Is there a motion to approve?
Yeah, I'll make a motion to approve.
Is there a
Second.
second? Motion has been made and properly seconded. All those in favor, please say aye.
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 Aye. So the ayes have it. I guess I don't have the agenda in front of me. So what I will do is turn it over to Chris. What's the next item on the agenda, Chris?
The review of the investment performance. You should have received the December 2023 document yesterday for Alex and Floyd to walk through.
All right. Thank you very much.
And I apologize. I'm in my car. My camera is also not on. But Chris, I don't know if there's anything you want to say before Floyd and I get into it.
No, I'll let you guys. Walk through it, and if the commissioners have any questions for me or for you guys, I'm sure they'll hop in.
All right, Floyd, do you want to give a review of the last month and a half or so, 2 months?
Yeah, no problem. Thanks, Alex. Hi, everybody. So for the last month and a half, what you've seen is just a bounce back within the market. And what do I mean by bounce back? A lot of the areas that would be considered your more riskier areas did very well. So small caps did very well for the last month of the quarter. You saw them bounce back. A lot of things, and this really spurs from in October when the Fed essentially kind of said we're taking our foot off the gas, and the market took it as you're taking your foot off the gas. You're definitely looking at the numbers. You are looking to make moves in regards to cutting interest rates. Automatically, Fed, said, okay, hey, the Fed's moving to probably to do 6 interest rate cuts in the next year, and the market took off. So you had that happen. You saw the 10-year decrease. So the 10-year actually went from a 5% handle, 5 handle, to more of a low fours or high threes, actually about 3.8 handle. And so that was a boost for bonds. That was a boost for high yield. If you think about it, your leveraged loans. You also saw a boost within there for small caps, and and a lot of other speculative areas. So that really juiced the market during the month of December. If you're looking at the numbers in totality, you're also noticing that we finished the year on a very high point. And while it might be all about the Magnificent Seven for 2023, over the last quarter, over the last couple months, it really has been more of an understanding of we're not going to collapse, we're not falling off a cliff. Recession concerns have diminished, and it's more of more people truly understanding of it actually is going to be a soft landing. We're not going to see growth collapse and GDP growth by that means. So that's what you saw during the month. That's what you've seen for the current year-to-date time frame. And those are some of the expectations for 2024 going forward.
Hey, Floyd, can you talk about maybe the recent, I don't know if there was a change in expectations for inflation going forward that happened over the last week or so. Yeah.
Yeah, so I think it's sort of been more the realization that interest rates, I'm sorry, inflation as a whole, noticing that it hasn't been as sticky as people were expecting it to be. It's really come down a lot faster than expected, which is also where you see a lot of the Fed cuts coming in. The most recent bump up within CPI, there was a slight bump up within there. But if you're looking at it over a longer trend, the Fed seems to be very comfortable with the path of inflation. And if you are looking at it from a perspective of, will we have lower inflation, or do they expect lower inflation going forward? They do. The story has been less about inflation, and it's now been really more about, okay, what will the soft landing look like? Will you still see growth within the economy? Will businesses either spend or not spend? And how stretched our consumers are at this point in time?
Thanks.
Anything else you want me to cover, Alex?
No, that was the only little extra point I had. If there are no questions, I'm happy to jump into the performance. As Floyd, mentioned, it was good on an absolute basis and also on a relative basis for the month as well as the quarter, and total 2023. Things look quite good. So if there are no other questions, I'll jump into that.
Excellent.
And yep, there it is. So, and I'm looking at this on my own screen, but $619,570,127 to end the year. 1 month returned 5.1 net of fees. 30 basis points or so, more than that, ahead of the benchmark. For the 1 quarter, coming off of that, including the strong months of November and December, nearly a 10% net gain for those 3 months. And then with the strong 2023, September, October, withstanding, 18.0% net, about 1.5% over the benchmark. A lot of that was asset allocation, although it was also strong performance generally from most of the active managers. Moving through within domestic equity, for the month, for the quarter, again, Floyd mentioned there was a sharp recovery, not just in the quality stocks, but across the board, riskier areas as well. Some of the actives did trail again in the last 2 months of the year. We're generally okay with that. PineBridge has done certainly much better than they have. They did exhibit some downside performance in September and October. We're generally pleased with their positioning. A little bit of a similar situation with Copeland. Again, a risk rally to end the year. High quality dividend growing stocks. Didn't keep pace in the last 2 months. From a full year basis, they've done quite well. Also exhibiting downside protection in that minor correction territory we were in in the early fall. International equity, again, similar story. For the quarter, both funds in a similar position, actually outperforming year to date as well. Quite nice outperformance ahead of the benchmark. I think for a full year basis, it's pretty. Oh, excuse me, never mind that. And then fixed income on the next page. Again, so for the month, a bit of a mixed bag. I think again, there was as Floyd mentioned, a pullback in interest rates. A lot of the active funds, which had done well again in September, October, August, as rates were rising, didn't keep pace at the end of the year. With that said, generally for the full year, most of the actives exhibited pretty strong performance, as well as a positive contribution from the allocation to corporate credit and high yield. Again, the managers themselves slightly trailed the benchmark, but the allocation contributing quite a bit there. So again, I think we're pleased with how things ended, but also how things went through most of the year. Again, 150 basis points of total outperformance for the full calendar year. So that's where things ended. And as of, I believe, 2 days ago, the market value continued to climb up to $621.4 million. So again, that's where things are. As we pulled back a little bit back in November, going to a neutral position. Markets have since, continued to climb. Obviously, strong equity performance. Even with less of a contribution from a minor equity overweight, the plan has still done quite well. We're not recommending, jumping back into an equity overweight at this point, but we're also not recommending a reval. I think right now the plan is about 1 percentage point overweight to equities as a whole. So, no recommendations to change. We'll continue to work with Chris and draw cash from the areas where we see, a lot of value to be taken. But otherwise, I think our outlook is positive. That's all I've got. I'll open it up to any questions.
Alex, just a comment, a positive comment on the since inception number of 8.17, far outpacing the assumed rate of return. It's very, very impressive. 1987, I mean, we're talking 36 years. So certainly not a 6-month, 1 year, 3 year period of time. It's a substantial period of time, all types of markets, all types of dramatic markets. So that's a nice number, and it makes me feel good seeing that number. So good work by everybody.
Yeah, that's a good point. I kind of neglected some of the trailing periods, but even that 3-year period, which includes obviously a very tumultuous market, exhibiting strong active outperformance over the benchmark. More like I said, I think the plan is assuming the right amount of risk right now. We've worked over the last 6-7 years to bring fees down. They're very competitive now. So like I said, I think things that we're in a pretty good place. We'll wait to see what the next 6 months bring us, but we're cautiously optimistic.
I have a question for Floyd, if I could, with the international situation, Gaza, Israel. What impact might that have on the markets as we look forward?
Well, I think if it spreads and it goes beyond just what's going on in the Gaza Strip, the Houthi rebels, and you see Iran really just go active. But in order for them to go active, that also means that, in their brotherhood, Iran is the little brother, Saudi Arabia is the big brother. Saudi Arabia has been making, if you think about it from an emerging markets perspective, they've been making a push to gain more market share. They've been doing that within the index. They've been doing that with their economy. So the little brother acting up isn't good for the big brother. So, from that perspective, could, they have somebody pulling their leash back, so they can't go all the way to the to the extremes that they want to go. If you were thinking about it from a conflict perspective, I think we've had such a quote unquote peaceful time for the last 20 plus years that, as we become more and more regional, conflicts like this, are going to kind of pop up and arise. The one thing is that, I think from a pure defense perspective, industrial perspective across the board, what this does is it now puts on show how those industries are going to be one of the main leaders in the indexes and one of the places to be going forward, because that's where the demand is going. And I think indirectly that's what is going to happen. The Gaza Strip, it seems like it's been more contained. Even if you look at some of the rhetoric that has been utilized by the administration, how they've handled things, um, they understand that it's a lot more sensitive than we just let Israel do what they want to do. And I think that that's what's happening over there. And it doesn't seem as if it's really impacted, markets and performance like that, just because of the size of how much Israel does make up within the MSCI ACWI US benchmark. It's not a significant portion within there. If I'm correct, it's less than 3%, if that. And so it's a very small, minute portion. But it seems as right now, it's just seen as just that conflict. The Houthi rebels are just more of a one-off. But it hasn't. The threat of spread is probably always there, but that's probably not the threat of spread. The threat of
I mean,
spread probably is more on the new issuance within Taiwan with their voting and China.
yeah, I mean, I agree, and I'll just add. I mean, you hit it kind of right when you mentioned Saudi Arabia. Qatar is also, in the mix. I think they brokered a medicine shipment today. They've brokered some of the hostage exchanges in the past. They're another party with a serious interest in preventing the spread. Obviously, Iran being the other side. There was something else I was going to. In relation to Israel's, participation, they are a major tech area. They're a bigger player in venture capital, but that's not reflected in public markets. As Floyd mentioned, I think it's less than 3%, and a lot of that is also, in tech as well. So, so far we haven't seen systemic spread.
Thank you. Any other questions? I'm sorry, go ahead, please.
I was going to say, just, any other questions for us?
That was the same question I was asking.
Yeah.
Christopher, how would you have us proceed?
I just wanted to mention before, assuming no other questions or new business, the RFP that we discussed is nearly complete. I've been just touching it up. Adam's taking a final look at it at the law department. Assuming no issues for that passive fixed income option, I would anticipate that being posted sometime next week. That was the only new business or comment I needed to add, Don. Thank you.
Well, thank you all for participating in this extremely efficient meeting. Is there a motion to adjourn?
Sure, I'll make a motion to adjourn.
All right, so moved. Thank you guys for joining us. Have a great week.
Thanks, everyone. Take care.
Thanks, everyone.
Thank you.
Thanks,
Have a good
everybody. Take care.